are in listen-only mode.
Alrighty, welcome everybody. Jamie Setley here with your May 27th, 2015 midweek strategy webinar with SB Trade Desk. So, several topics to talk about today specifically. I just want to kind of run through very quickly some of the key levels that were kind of identified over the weekend. The Euro crosses are the most interesting right now. I wrote last night in the last night's piece about the Euro. Some of these crosses, they can't stay where they are, right? We're either set up for a rip, or these things are going to fall off the face of the earth. And kind of, we're positioned for both. Luckily, we were able to get in at really good levels with the Euro Yen long, the Euro Yen long, excuse me. And then the Euro Kiwi short's been going on for almost a week now. Got off to a real good start. It's just kind of been consolidating. They could end up failing, of course. So, we don't obviously know what's going to happen, but we are at break even on the position. So, um, no harm, no foul. Can't really get hurt there. Brian Sarich says the volume's cutting out. Can everyone hear okay? I just want to make sure everyone can hear all right here. Audio is okay, I'm told. All good. Okay, so I'm just going to keep going, Brian. Not sure if it's something on your end, but seems like we're doing all right. Okay, let's start up with we'll just start out with the euro. Like I said, I want to go through a couple crosses, just the key levels. So the euro dollar, the key levels that we were looking at as far as euro was concerned, I had a couple written down here: 109.65, 108.65, or really 108.65.45. Obviously, we're pressing the bottom of that zone here. I mean, we traded down to 108.18 today. Have had a bit of a bounce. Traded all the way up to 109.30 earlier. Let's see. We're not going to make, even if we do close higher today, it would not be a J spike because the ATR on the bar is not significant enough. You've got to have, again, one of the requirements for the J spike is you do have to have the ATR be at least as great, or the range for that bar be at least as great as the 20-day average, which in this case would be 1.25%. And where today's range is 1.01%. We are, however, interestingly getting, you can see the little tiny blue dot here. We're starting to, the profile, and we've talked about it with RSI, but the profile for rate of change and stuff is starting to change, whereas we were getting bearish signals throughout here, and now we're getting a bullish one. The last bullish ones we had some through here, which obviously didn't work very well. We had some back here in November before we got somewhat of a bounce, nothing spectacular. But the biggest thing with euro is where we're trading on this. Sorry, let's see here. There we go. At this confluence, okay. This is the same chart that was circled, or that was shown over the weekend update. All right, so here we go. You can see the downward sloping fork. So we are at what you'd call lower parallel support, but within a downtrend. When you do end up meeting that support with an uptrending line, then you have something that could be a pretty good idea as far as a long's concerned. The concern here, of course, is that the market we took that level out. I mean, if we do close up here and make a key reversal, it does add a little bit of, idea that we might be trying to bottom, but you'd like to see the market find support on the line, of course. So, if we would have traded straight up from yesterday where we finished here at support, it'd be a different story. That's not to say that there aren't opportunities in the other euro crosses as we've been talking about and as we've been trading in. So that's the euro. Bottom line is, this is about as big a level as it gets right here, 108.65.45. If we don't hold this, I really don't have, decent, any sort of decent support, until probably all the way down near 105.65 or something. You'd also be, if we do bounce from here, you'd probably be looking for resistance perhaps on this median line, which would come into play with the week open later in the week. 110, and then you've got the former highs at 110.35.65. So support here, better resistance on a bounce, upwards of 110, 110.50. But not a whole lot of clarity right now with the euro. Pound dollar had written down 153.30.50 as a big level, and that level has more or less given out now. You can see what it was. It was the median line here. Okay. And I thought it was going to be extremely important because the market had respected it very precisely numerous times over the last several months since February. Today's breakdown through it then can be viewed as important, and the underside of that would be resistance now at about 153.50. So it's funny, after all is said and done here with the pound, we are now about 20 pips, 30 pips lower for the month of May in pound dollar. So after all the zigs and zags, pound is virtually unchanged for the month. And this little break here, by the way, tells us that we might be able to look at pound yen for something, which I'll get at in a moment. Aussie dollar came into the week basically, right at this level. Here was holiday trade on Monday. Yesterday, of course, with the huge dollar rally, and today following through. So at this point, it wouldn't, be looking at support for Aussie until at least 76.30. That is a weekly reversal support, and you do have slope support there as well. Okay, you can see the support goes off these two lows, right? If you extend it, parallels, you do get some pretty good touches as far as parallels are concerned. And this isn't a pitchfork, by the way. I didn't draw a fork. This was simply a trend line that I noticed the market shared similar slope at previous inflection points, and so we had extended it off these levels and gotten pretty good results as far as where the market's crossed. Dollar yen, of course, I had written down 123.16, 124.16. We're already closing in on 124.16, 23.92 right now. The triangle here, I guess, is the correct count. It's pretty awkward because it's, the E wave, if you will, is just so small, but it is valid as far as this is concerned. The pop up through here, this median line now, you'd be looking at support on the top side of this. So about 123.35 on tomorrow if you get the zoom and retest. But again, we are coming up into huge levels, right? You've got 124.13 is the 2007 high right here. So we're just pips from that. Go through there. The next level is 125.73. Obviously, if this continues higher, then our euro yen long should probably be the target, probably be hit here over the next day or so. But there's always, of course, after you have a big move like this, there's always, of course, the risk of somewhat of a pullback, which is why we're going to look at pound yen here in a sec too. So this is dollar yen. Look at this dollar yen. This is a monthly chart, by the way. 1995 low, 2005 low, and right here, where we are right now. And then this, goes to 1990 high, 1998 high. We're right there. We were actually looking for this level to be reached a couple months ago. It wasn't And now we're getting into it. So there's a few things here. Obviously, we're at a big level. You can get, a big overshoot of it. We'll see what happens. But, with the triangle pattern, the implications are that this proves terminal, but, not until you get an impulse, okay, from the wave E low here. And just to give you an idea, a couple triangle levels to keep in mind. There's two of them. One of them is the 161.8% expansion, if you will, of the range of this triangle, which comes in at 2570, and the 200% or double it, which is a more classic way of measuring the triangle, if you will, is 128.12. So those are two levels to consider on the upside. When we look at, of course, the weekly chart, you're going to want to pay attention to the upper parallel here, okay? Last year we went right through it, and then that was a blow off, and then we came back in December, quickly retraced the breakout. But you can see that this upper parallel is slightly higher, and the cluster's up over the next several weeks, just above 125, but below 126 are the levels that you might want to pay attention to eventually. So the point is, dollar yen's broken out. No reason to expect an immediate reversal. We're positioned, with euro yen, and you might ask, why not dollar yen? Well, where's your stop going to be here, right? It's one thing to get out at the point of breakout, but here, look, if you go long here, where's your stop? Even if it's below today's low, it's 22.75. That's 100 pips of risk. If you can pull back into this, you might, have an opportunity, if you're nimble, to get in at 23.30 tomorrow, and then put a stop at 22.75. Play a breakout for, potentially, as high as 25.60, or maybe even the mentioned 128. But think about the other side of the ledger, right? The risk part of it. All right. Kiwi dollar. Kiwi has failed to hold up here. As mentioned this morning on Twitter, you'd like to see, or not like to see, but if there is going to be anything bullish here, that's going to be, you're going to need to see a move back above 72.80. So something I want to point out, the wedge that we had identified some time ago does seem to be playing out. Got kind of screwed up with the trade as things just went haywire here a couple of weeks ago. And we're stopped out for a small gain rather than holding on for what should be a bigger gain. But what I want to point out are two things long term. This, okay, the slope line here. When you connect the lows from 2000 and 2006, okay, that runs into all the highs that we had last year for these 5 months in a row, okay? That parallel has significance because it also got lows in 2010 and 2013. So if you extend it from the low here in March 2009, the panic financial crisis lows, guess where it comes in just, this month, so the rest of this week. It comes in at 70.97, which happens to be the March 2011 low. So you've got a big level here, 70.97. Again, the wedge target's down near the 66 area. But this is something to pay attention to, and what I'm going to show you now gives you even more reason to pay attention to it. Okay? If I show you Kiwi dollar weekly chart, if we come down here and test the lows at 71.87, which is not very far away, what you're going to do is we're going to get a TD sequential DeMark indicator. We're going to get a TD buy signal on a weekly chart. Haven't had those. We've had sells, okay? The last time we had a buy was actually all the way down here in 2001, okay? It was near the lows before the great bull market dollar bear market. These obviously don't always work. Okay, if they always work, then you could just follow this, and that's all you would do. But the combination, you can see, you can get them in trending markets, and they'll totally fail. But the combination of the mentioned slope area, along with the TD, the DeMark thing here is interesting. Okay, so just something to watch out for as we approach the lows in Kiwi. On a shorter term basis, so we look at Kiwi here, you can see how this is the short term slope. And there we go. It's a 60-minute chart. So short-term slope, it's been pretty good. We did bounce from pretty close to this lower pedal. Again, this is downtrend support, not something to buy into. You want to have an uptrend to buy into. Did fail this morning. The rally failed here this morning, actually last night, at this median line, right? This is the bigger one. Lows failed here. So that's why a move above 72.80 would be so important and really just, flip things around. So for the moment being, be aware of support near the lows, as mentioned, that down near 71, 70.97 is the 2011 low in the long-term slope. And, until, you get down there and see some sort of response, longs are pretty dangerous and have to see above 72.80 to change that. So wait for a second to look at the S&P. Euro pound. Interesting in that we've actually turned at a pretty good level here right now. So this is one that actually be looking for a long position, probably put in an order tonight for Euro pound. Okay, you can see the combination. First of all, if you look at the weekly chart, I mean, yeah, we've got a huge level here. Okay, and we have come into a huge level, and we're kind of more in range territory now. But if you look at the daily chart, this is a really good response. Daily reversal support, again, that's the level right there, 70.63, the close of the low day, which is 70.63 on March 11th. Okay, we've traded both those days or into both that level both yesterday and today. Outside day reversal today. Is this going to be a J spike today? Let's check it out. Gonna have to rally a little bit more than that. So not a J spike yet, unless we're gonna have to rally about 30 more pips in Euro pound. But Euro pound looks good on the upside from here. And as far as where you want to take it, you'd be watching for resistance probably near 72.20 first. But remember, these are pound pips, so 100 pips here is $150 pips. So yeah, I'd be looking at Euro pound on the upside, probably put in an order there tonight. It's one of the cleaner, short-term trading ideas right now, in my opinion, with this range and whatnot. Let's see, Euro yen, obviously you're well familiar with that right now because we're in that trade. We had gone long here after yesterday's response at 33.71 that was triggered yesterday, and looking higher again today, tomorrow, 35.73 is again, that's daily reversal resistance. Now look, is there the possibility that we go a lot higher? There is. The reason that I personally would be am getting out, or advocating, if you will, to get out up here is the simple fact that dollar yen is coming into that 2007 high at 124.13. You might be able to roll into better euro trades. And look, quite, simply, there is resistance there. Okay. So this, the bullish slope is very much in effect, especially after we have responded to this median line area, not to mention this slope, okay, which I'll darken so you can kind of see it a little better, right? But so we have responded there. It was precise on the 18th. But, you know, a move up into here, into 3570, get out at that point. One, you've got resistance from slope. Okay. Two, you've got resistance from daily reversal with the close here on the reversal day, 518. And, you know, you might get a pullback anyway from here. Okay. So even if this is going to coil for a bigger move, you know, in the coming weeks and whatnot, you're going to, you know, this is a level that, you know, play the range, if you will, right? You know, a short up here is not all that out of the question, to be quite honest. So move up into here might complete a move off the low, pull back again, perhaps down into this median line, you know, which in the next few days could be down anywhere, you know, 134, 134.50 at some point. So we'll check it out. But for now, stick with the program as far as Euro Yen's concerned, 135.70 target. You know, we're free money at this point with the break-even stop, which at this point would be below today's low, so we should be good there. What else did we? Oh, Euro Aussie is an interesting bugger, if you will. So Euro Aussie tightened up here again. Think about when we looked at both of these, both the legs of this cross, right? Looked at Aussie dollar, it had broken down. You know, it's the big support probably doesn't start till 76.30. Euro dollar stabilizing or trying to, it seems, at the big 108.65 area, the high volume level from the 18th, Fibbo level at 108 108.45. So we're trading around these areas. If we can get a bigger pop in euro and Aussie continues down into the 76.30s, you're probably going to get a pretty good looking rally breakout in euro Aussie as well. So we've responded to this lower parallel. Okay. Here's what it looks like for euro Aussie. You can see euro Aussie weekly open 40.59. Okay. Impulse 1, 2, 3, 4, 5 pullback. So at this point, might be safe actually buying against 40.35. This is 40.38 right here. You know, for a few things. One, a run up into probably 42.70. You might want to take some off at 41.55, 41.57 is the close here. But this could be a bigger breakout as well. Okay. Yeah. Mark saying happy that Michael pointed out to me euro wasn't really short, so I went long at 40.70. Yeah, exactly. I mean, look at, you know, it's acting well down here, right? You've got a lot of, it's a range here, okay, but the big move we had off the lows, and if you look at the weekly chart, I get there's a shit ton of stuff going on here. Excuse my language, I didn't realize I just said that. But there's a bunch of stuff going on here. Wix, exactly. And again, here's the monthly chart. And remember this one? This is this we could get a huge rally off of here. Okay, we had, not to mention, we had a monthly reversal right here. Okay, you know, it's good to know that where you have these monthly reversals. Talked about that with EuroCAD, which I want to look at now. EuroCAD, right? Remember the EuroCAD potential for just an absolute surge? I mean, you could make the case that this whole decline is a correction throughout 2014, 2015, right? So EuroCAD's one that we're probably going to look to put in longs as well. You know, maybe looking to get in at 35.20. Close. It's a week open. It's also yesterday's close. Stop 34.80 and prepare for a breakout potentially up into at least 140, 140 plus. And you want to think ahead too when you're, you know, get involved with something like this. You know, on Friday, we've got a lot going on with Canadian data. So I got a great question here actually. So, new subscriber, I believe. welcome, asks, nice one with the language. Back to point. All these crosses look tempting. However, what do you think about the fundamental theme of Euro generally? So I remember a couple months ago, actually it wasn't that long ago. It's probably, I don't know, it's probably back here somewhere. And people were, it might have been here. I don't know. I was doing one of the midweek webinars, right? And someone had asked, I was bullish Euro. There weren't any trades or anything, but I was bullish Euro, and people asked, well, what about Greece? Blah, 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 right? What about it, right? I mean, Greece was fine here, and the market's tanked since then. Now Greece is a problem again, okay? My point is, you have no control over what does or does not come out in the news. Things are always worse at their worst before they rally. Things are always at their best before they decline. Okay, so if you're trying to time something on the Greece news and whatnot, it's not my game. What you can do, what you do have control over, is whether you pull the trigger and where you put a stop and the reward to risk that you structure your trades around. So in the case of euro dollar, yeah, look, we don't have a whole lot to go on with anything bullish right here. I mean, we're kind of at the, a long here would be good reward to risk, but it's probably more of just a gamble than anything else. I mean, as in not the, the best, information at hand to go long. If we start to rally, and break a daily high or something and, start to get an impulse on the short-term charts, a little different stuff. But when I look at something like euro yen, right? Was I thinking about Greece when the market pulled back here and I put orders to go long? No. Right? And if I was, I'd probably never would have taken the trade and I'd be sitting here, not long euro yen, right? So don't really care about, we went long at 33.71, and if Greece fell off the face of the earth, then I guess that, the euro would have fallen a lot and we would have been stopped out for a loss. But it didn't, and now we're sitting in a decent position. At the same time, Euro Kiwi went short Euro Kiwi last week right here, 152. Was I thinking about Greece at the time of Euro Kiwi going short? No. I was like, we had some pretty good resistance here. This was a chart that we looked at during last week's webinar, right? I was like, we've got good resistance here. So if the market starts to act right, then I'm going to go short. We did. We might get stopped out at break even on this. Hopefully, ideal scenario, we get a rally in euro a little bit and it takes us out of euro yen, and then Kiwi turns around and rips or euro tanks, and this works out too, right? But euro Kiwi might stop out at break even, and euro yen might just go to its target. We'll see. But point is, you don't have any control over it. You do have control over where you get in, where you place your stop, and how you manage the trade afterwards. In other words, if you move it to break even, and protect yourself and all that. Look, there's going to be bad streaks. There's going to be good streaks. It's just part of the game. Over time, you want to be profitable. But yeah, so when it comes to thinking about, trading the stuff, I have absolutely no care in the world about Greece stuff. I mean, just this morning there was rallies on rumors or news on Greece. So I mean, it can be a positive thing too. It doesn't have to be a negative thing, right? All right, so there we are with that. So where are we? S&P is ripping again. So much for resistance. So are we going to new highs? Maybe. I don't know. I wanted to actually talk about S&Ps because this is the most insanely weak. I'm gonna put up a chart of only the S&P 500 on a weekly chart, and I'll put up Okay, S&Ps. So hey, Stefan, what's up? No, we haven't looked at, well, yeah, I actually just did look at Euro Kiwi, but I mean, it's not, there's nothing to note really that's not on the in the swing updates. So when we look at S&P 500, look at the last, since basically December, price highs, okay? RSI, it's not just divergent, it's like insanely divergent. It's beyond insane as far as divergence is concerned. This last price high that we have, RSI is actually at 59.7. Okay, we're below 60. So this is what a market looks like, the profile of RSI looks like before it falls, absolutely falls off the face of the earth. Is that to say the market can't go higher or do nothing like it's been doing for a while? It certainly can. Okay. For all I know, there's going to be a blow off and it'll be insane. And I don't know. I mean, I thought the blow off was underway recently when we had this move up here last week to new highs, that we were going to blow off for a week, and then come June we'd be able to go short the S&P, because June is historically the worst month for the S&P of the year. Anyway, yesterday's decline, kind of put damage to the breakout, but now here we are again, back up 14 points today. So whatever. My point is, don't think about all that. Just look at this and what this RSI looks like here. We'll look at the daily now too, okay? Look at this. Each price high, RSI has not even been able to clear 60, going all the way back, all the highs we've had over the last month plus, okay? I mean, it's absolutely horrendous. The lack of momentum in this move. So let's look at what the euro dollar looks like, or looked like. Okay, I'm going to get rid of anything and everything that we have here. Remove drawing objects. Okay. See, what did euro dollar look like before? So last year, here we go. Obviously, it's different type of scenario, right? We have a very, very long entrenched trend in the S&P. The euro had been rallying for several years, but look at what RSI looked like on the weekly as well. It's very similar. Okay, and looking at the price highs, at the last high, RSI was again below 60 up here. Okay, this is a weekly chart, right? So that's not going to include the spike that you had here up to 39.90. That's when Draghi came in and started hinting QE stuff. So, you're not going to have, saying it's a little difficult to say, well, you could have gone short here. You could have, but I mean, you would have had a very large stop and you would have waited for several months in order for it to work out. But my point is, just be prepared to be short the S&P at some point. I don't know if it's in a week, or today, or in a couple of months. My point is that what we're seeing as far as the long-term momentum in the S&P, it looks the same as it did last year for the euro before the euro just totally collapsed. Okay, so my point, something is holding up the S&P, and it's totally artificial. It's not going to end well. Similar thing with crude oil last year. Right, crude oil had been climbing. RSI couldn't push through 60. It wasn't nearly as interesting as the euro, or similar to the S&P as the euro is. right now. Even at the daily, this is a daily Euro chart, same thing. You had the highs here, right? Price highs, RSI 60. This RSI actually looked better. Actually was above 60. The S&P right now, RSI, it's not even above 60, right? So Stefan asks, if the insane blow off in the S&P, do you favor long yen? So by long yen, that would mean like short yen crosses. Is that what you're referring to? Not exactly sure what it is that you short dollar yen. Well, if there's a blow off in the, first of all, don't think like that. Okay, don't think like one market does this and the other market will do that, because the S&P hasn't done jack in a long time, and the dollar yen's gone absolutely nuts for a while. So don't think like that. Also, if we're looking at bonds, like I've been trading the bond market lately, uh, bearish bonds, you would have been bullish the dollar, right? Because of interest rates. Well, actually, the whole bond sell-off, the dollar got murdered. Okay. If you were, and then recently I'm long bonds, looking for a rally in bonds, and usually you'd be bearish the dollar because you're like, well, interest rates are going to go lower. Well, the dollar's actually ripped higher as bonds have gone higher. So it's done the total opposite of what you would think would happen. So that's why I'm saying look at each market on its own merits. Don't even think about what it is. It's almost better to do that. So, short dollar yen will happen if you get like a big daily reversal, like a J spike, break a support. Right now, if you're looking short dollar yen, you are fighting City Hall, right? Mark says bonds rallying would support the short S&P, right? Maybe, but you don't know that either. We've seen days where both bonds and stocks have gotten murdered. Okay. We've seen days where they've both rallied. So again, think of it, each market as its own trade. It's really hard to do because you want to tell a nice little story and wrap it up in a box and put a bow on it and, say, oh, well, this is going to happen. Therefore, gold's going to bounce and therefore bonds are going to rally and the S&P is going to fall because it's going to be whatever. You don't know. So, as it pertains to the S&P, the only possibility right now I can really give you for, could this have been the top? Again, the weekend chart that we looked at. If this was a top, then your best indication of it being a top or the top is going to be a drop below this line right here. Okay, which obviously would be a pretty decent drop from here already. It's like 50 points lower. But you've got, let's see, this could be an any diagonal, 1, 2, 3, 4, 5, right? So, you could watch 21, 24, 50 as resistance. That's the weekly open. It's also the daily reversal level. But really, until this line breaks, you got to respect, again, as mentioned in that weekly piece or the weekend updates of the bigger, longer term charts, you got to respect the potential, for a move, I guess, all the way up to 2170, right? Up here. That could be your blow off, potentially. Again, I don't know, just possible. So, we'll see. We'll see. Yesterday's move did run into this thing, right? But I spend so much time on the S&P right now because I think there's a huge move coming. And if you go up to 2170 first, It's even better because then you got a really good short. We'll see. We'll see. We'll know when we see it. Hopefully, the big short coming. Hopefully soon because it's getting kind of tired to wait for it. But whatever. All right. Well, let's look at. So one thing I like I said earlier, I love Euro Pound on the long side here. I just really do. I like it. It's it's come into a very well-defined level, slope-wise, even though it's within a downtrend, but it's really more of a range. And the daily reversal and outside day here. So yeah, I like it. So let's see what we can get on the short-term picture, right? So what's this hour? That's 10 a.m. See, you don't even need a volume figure to look at this. You can tell this would be high volume right here, that hour. Okay, just tell by the bar. So if we were to draw something like this, description of price, if you will, of slope, this might be the one to work with in the short term. So former lows. So yeah, we might be looking at a long for Euro Pound. Potentially a little pullback. Look at the 15-minute chart. Promising. 5-minute chart. Certainly promising. So if we were to put a fib on here just to get some retracement levels. So tomorrow, if we can pull back tomorrow, potentially into the 70-80 region, 70-75, 70-80, just right near that level anyway, right here, the high volume area of 70-80. You might have a really good long entry down here for Euro Pound. And again, you'd be looking at probably a stop 70-50, 25, 30 pip stop for Euro Pound, which again is multiplied by 1.5 because it's pound pips. But you're looking at that point, you're looking up towards at least 70-20 and maybe higher. So I like Euro Pound on the upside. I did say earlier, I said that we might look at if there's going to be a yen short, like a yen cross short. I think the place to do it again might be pound yen. I still can't believe that S&Ps are just blowing through everything today. Whatever. Bonds turning up. Here we go. Anyway, S&Ps. The S&Ps. Pound yen is what I wanted to look at. Didn't I have pound yen over here somewhere? EuroCAD, pound, here it is. So pound yen, okay. Pay attention to the long-term thing that I showed a post or so ago. Okay. 1, 2, 3, 4, 5, 6. This will be week 7. Okay, of an up week. Remember, 7 up weeks, pretty rare in pound yen. So we had 7 up weeks at the top here in December. We got to 8 up weeks, and then we had the high on what would be week 9. That was December or January of 2014. 7 up weeks, and then in May of 2013. It's obviously May of 2015 now, so seasonally that's interesting. Did have 7 up weeks in March 2012 before you did get a pretty good sized pullback, and then the thing continued higher. So something to watch for pound yen. Again, it's early here still, but something to watch. See if we can fail, if this thing wants to fail. Before getting to this resistance up here. Remember, if we fail before getting to resistance up here, that would be called a, I call it a space, right? A space warns of a weakening trend, right? Weakening momentum and a pending break on the downside once it revisits support. So, when you, in the previous instances, when we've gotten up to resistance, you've had strong pushes through, right? Telling you that once you fall, get into support, you're more likely to hold it. Well, if the market were to say creep up here a little bit, right? Next day or two, rest of the week, I don't know. And then all of a sudden it reverses sharply, you get a down day without getting up here and failing to reach resistance. So you reverse before you get to resistance. That risks a much deeper drop. So that would be a good way to start a bearish scenario, for pound yen. So pound yen still on the, it's on the radar. Really stalking this one. We called the day of the low back here, but unfortunately never really did anything about it. So let's not let that happen this time and try to stay on point with pound yen because, again, 7 weeks up, the long-term slope resistance, albeit uptrend, but still 7 weeks up. A very mature long-term trend. There is certainly, pound dollar itself breaking below what you would expect to be a decent hold. So kind of flipping the switch there. Euro pound finding support, et cetera, might give you an opportunity to play a pound yen short. But again, it's early. I'm not saying to do this now. I'm saying to wait until it has shown you that it's not going to reach resistance. So that would mean it fails, before getting there. So that's something we'll watch for. Okay. What else? Excuse me. Oh, I have one that's interesting. This could be a really interesting long-term play. So I was thinking recently about, obviously, New Zealand dollar, right? And that possible 71 figure being a big level to watch. So I took a look at Kiwi CAD the other day. It's actually quite constructive. Okay. We look at, say, right here. Okay, right there. Boom. So this is Kiwi CAD, and this goes back to, this is a 2006 low, 2007 high, 2009 low. Here's the median line, right? Median line itself has actually been pretty freaking awesome. Support, resistance. Didn't quite hit the high price up here, which was 7 weeks in a row. Okay, now what do you have? Well, notice that each low here, see the lows that you started getting? I mean, this is an uptrend, but it's, not an uptrend that you sit there and hold because you'll just be really annoyed. But it's an uptrend that you can trade. You can trade into the buy the dips and whatnot. So look, we could have a bigger behavior change here, but this is still an uptrend, and you're still at support. And support here, lower parallel has never been reached, but the parallels that slide off of it have been reached several times. First one would be going here and sliding a parallel from 2011's low, and you would have gotten support here in 2013. Most recently, support here, that just got support here, and Mark brings up a really good point. He goes, but there wasn't a higher high. That's correct. This could be a much more important topping formation, but that doesn't mean there's not a trade on the long side from nearby. Here's what I mean by that. The fact that you didn't get a higher high and you do have basically what I was just talking about, which is kind of a gap between, a space, momentum, and whatnot, right? This could be a change in behavior. So you could either be going into a range, or we could be breaking, into a downtrend or whatever. But you have the median line here from this structure. So what you'd be looking for is resistance up here at the upper parallel, which gives you plenty of room on the upside. If we look at the daily chart, which has a shorter term, this is the one on the weekly, okay? This big one up here. To make it a little clearer, you might make it a different color or something. I'll make it green. Okay, so that's the one on the weekly. You could get resistance before that. This is what I'd be looking for. Remember we talked about KiwiCAD a while ago, around this time when it was breaking down here. But you had a huge reversal bar, okay? This is your daily reversal area here. What's that? 89.46, daily reversal support. And we might be able to put some sort of, it's not going to be that. You have to do a little different method here because it's just too sloppy, right? That could be something that works. Remember, we don't want to necessarily go off spikes, so look at an hourly chart and see if we can get something to work with. All right, so this might be actually something to work with right here as far as positioning, right? So we've identified a few things with KiwiCAD. One, we have this really long-term slope deal. Okay, and we've come into this, and it's possible that we're going through a much larger change in what's happening. But even so, there's still plenty of, room for upside. The first resistance wouldn't really be until about 91.67, currently trading 90.15. Okay, so you want to know, where can I look to get in? Well, so far you've got the week open price actually holding pretty well, but I'd be looking to get in on here on this lower parallel. You can see that this tells you that you might have the right idea as far as the short term is concerned. You can see that the market did trade up into the median line. Since then, it's consolidated sideways. So it is primed, for a short-term bullish event, if you will. You do have an impulse off of the lows. You do have a correction from there. Okay, so basically, you do have plenty of reason to look higher in KiwiCAD as long as it's above 88.90. All right, and this being support down here on this short-term lower parallel. Okay, so CAD itself looks prime for weakness. Again, EuroCAD, we like that on the upside, potentially for a much larger gain, all the way up to 141 area potentially, 140, 141. KiwiCAD's a possibility. Here's EuroCAD. Okay, we got the low we were looking for here. We'll see if we can get an order into 35.20 potentially with the stop at 34.80, 40 pips of risk. Upside 140 plus. That would be the first target. You could have a much more important low here with a launching off of a kind of an inverse head and shoulders pattern here. So that's what we'll be looking at going into tonight with EuroCAD, EuroPound, some of the ones that I'm probably going to put orders in for. All right. Okie dokie. So that's it for now. tracking a few things in a few decent things. Uh, like the fact that Euro Yen's breaking out a little bit here. This was resistance, right? You can see that this morning we actually failed near it, so I got a little worried that we weren't going to make it, but now we're looking towards 3570s, okay? So that's it. Again, thanks for attending today's webinar. I'm going to get this archived as soon as I can, and we'll be out with the SB Swing update later, of course. And thanks for watching. Everyone have a great rest of your week. All right, take care.